All right. Good morning, everybody. Got a couple people in this room. How's everyone doing today? Ron, you finally made it back. I'm going to take your face off that milk carton. Good to see you guys in here this morning. Hope everybody's doing well. Guys, we're going to do something different today. I'm pretty excited about it. It'll be fun. Um, so we are going to forego the 101 drill. Good morning, Bajoy. We are going to sidestep going through the 101 stuff this morning, guys. We're going to get to live charts. We're going to do a big division between, I'm going to focus mostly on NinjaTrader. That's what most of you guys are doing in here. But I'm going to go back and forth between the two. We're going to look at both platforms, NinjaTrader TV, and we're just going to have some fun today, guys. We're going to do a lot of chart reading. If trades present themselves, we will look to them if the rules are met. And guys, I want today to be a discussion. As we go through and do this, we're going to look a lot at trigger lines. We're going to look a lot at areas. We're just going to have discussions about what we see on the chart. I won't be calling trades. I may enter some trades on simulator just for the fun of it. But just something different, guys. It's Friday, so let's have a good time. Checking news. Not a whole lot going on. Hey, Steve Diego. Good to see you. So you guys doing TV, you guys working on that TradingView platform, feel free. Drop it in the room, ask a million questions. Let's go through and let's have some fun today. Cheeseburger news at 10. They're calling it low impact today. They don't have chili dog news. I don't know. It's the man trying to keep you down. That's what I can figure there, Ron. Every morning I do come and I look at forexfactory.com. I just want to have a heads up when news could create a spike. I think a lot of you saw this morning that it doesn't always take news to create a spike, right? There's people that want it to move and those people make it move, and that's exactly what they end up doing. So as we go through today and we look at it, and guys, we're going to do a lot of fun stuff in the live market. I want you to remember that a lot of what we talk about today is going to be momentum, strong triggers, and clear paths. So I'm going to go through and I'm going to try to just keep continually going through those lessons. Just a heads up, today is 100% unrehearsed. So we're going to wing it today. And it's not because I don't think 101 is important, but I think that 99% of my room don't need it anymore. You guys have seen it. Now it's time to put it into practice, to look at it, to see it in a live environment. So we're going to try a little transition here. And the surfer boys and girls, I like it. So we're going to talk about momentum a lot, strong triggers. We're going to talk about having a clear path, and we're going to look for entries. And when we look for entries today, guys, I'm going to keep it KISS plan. So we're going to look for high probability trend trade entries. We're going to talk about the whys when we see them. And then we're going to talk about the 50-50 trades, and we're going to look for that best of the best and really just have a good time. You folks have the opportunity to post in the room. Everything you see, everything you do, every question that you have, I want you to drop it in the room. We're going to go through and we're going to talk about looks. We're going to talk about rules. We're going to talk about everything that we can possibly talk about. So let's make it a discussion today, guys. Don't make me flap my gums for 3 hours trying to hopefully say something smart that you guys need. When you drop in the room, do me a favor, tell me what you see. We'll go into it. We'll turn them into lessons. It'll be a good time. So without further ado, guys, the market isn't open for about 30 minutes, so we are looking at pre-market. No news to speak of. Guys, if you need the trading plan, if you need all the good stuff, go to the Nexgen page. I am going to drop in the room a file called All You Need. And this file, wow, that looks weird. The file that I'm dropping in the room right now, All You Need, it's got all the study tools. It's got a PowerPoint to go through the indicators. And it really is the first hour summation in one easy spot for you. So go take a look at it. And all it is a consolidated version of everything here. We are missing stuff on here. I think they're doing a rebuild on the Git book. Let me double check. Trading guide. Yep. Let me send that over to my people real quick, guys. 99 out of 100 times, all the answers are there. And that's where you can typically find it. But let's go through and do some reads. Guys, I pulled up, I got people. I'm not the one, man. I am not the one. Guys, this is crude oil. So we're going to watch crude oil. We're going to take a look at, I'm sorry, gold, crude oil, and the S&P. And we're going to talk about the relationship of trigger lines to areas, understanding that when all of your trigger lines get above an area like this area is likely to keep that market from going back down. Trigger line location is a really big indication of what may happen. When price reaches an area and all the triggers are below, this is where you start to see those big bounces. This is where you start to see those retracements off of key areas. Call that a termination condition. Anytime price reaches resistance or support and all the triggers are below, the market's more likely to bounce and do something that could pull you out of a long position. And the same is true if that retracement comes back to Fibonacci support. Does everybody see how the large triggers didn't blink? Guys, this is your, hey, don't go short. A lot of you get excited about, man, I can't wait to take a short trade. What a great termination condition. Your trigger lines are going to tell the story, and your awareness of where they are in relationship to areas is going to pay huge dividends, guys. So we're going to do a little study, and we're going to use John Novak's template that he put in here. I think it's brilliant. So today we're going to play the no triggers, the 2 triggers, the 3 triggers game. When all 4 triggers get above an area, that area is broken. When only 2 triggers get above it, it's less likely to just smash through. When no triggers get through, we get those bigger bounces. And guys, you're going to see it over and over that the trigger lines really tell the story on everything. If price reaches an area and the triggers aren't through it, guys, the likelihood of the market breaking through that area goes down dramatically. See it here again. They get right up to that area. All your triggers remain below. That market's not going up, guys. Hope isn't going to get you up. There's a good bounce. Pulls right back to the 1-to-1s. All the triggers are north of it. And sure enough, that market continues up. So we're going to use that a lot today. We're going to talk about momentum today. We're going to talk about the idea that your trigger lines can tell the story, guys. And when there is a separation between your trigger lines, whether it's the market going up or whether the market's going down, this is gold. I like this lesson for momentum a little better. Guys, when your small triggers break away from the large triggers and the down, you have what we call strong triggers. And strong triggers push a market. When your small triggers are above the large triggers, everything is going up. That gap between the two lets you know that the odds are favorable for that market to continue up. So we're going to use that idea of trigger lines can define your momentum. Trigger lines can give you an indication of what the reaction may be at fibs. And we're going to tie all that together to eventually go look for what we call a high probability trend trade entry, which means that when I have momentum and my trigger lines get above that area of support, guys, we can begin to look for pullbacks to areas. We can look for opportunities. I don't have any sort of ATM strategy in there. We can look for opportunities to get into the market, to capitalize on that momentum, to capitalize on that trigger location versus the area. So I really want you guys to be vocal today. We're going to look at the high probability trend trades. We may even jump into that chili dog trade that you guys like every now and then. If we see it set up, I want you guys to be vocal, though. I want you guys to talk about what you see. I'm going to ask a lot of questions. Where are the triggers, guys? What's the expectation? We're going to go through it together. Play along with me today. Otherwise, this is going to be a really long class for me. Paul got us going this morning with a picture, and I want you to see. Paul, you had a weak top, but you did have strong triggers. And that area had the potential to break. And guys, this is one of those things. 2 triggers through, 1 trigger's above. This is the 50-50 look, guys. That momentum says it has the potential to break. Your trigger lines say, because only 2 triggers are through the area, it's less likely to break. Manage it assertively. Paul, you take a beautiful entry on the way down off resistance, and you get paid right at support. Great base hit, catching it in between the fibs with all that momentum. Understanding that it's not quite broken yet gives you the ability to manage assertively. Really nice trade, Paul. Great management. Taking care of your assets because it's not the perfect trade. And then did Wayne's answer get you for those divergences on the small chart? That was the perfect visual. I'm telling you, most of you guys could teach this class. You've heard it all enough. We're going to look at Wayne's picture here, and I love it. Trend trade, weak top, odds favorable, clear path. So what Wayne's talking about, he says, my trigger lines are beginning to separate. I have momentum. There's nothing in the way. I have a clear path. And he's going to come to a smaller, faster chart, guys. And he's going to wake up late and miss the perfect entry, which is okay. That happens. When he sits down, he says, whoa, this is the perfect trend trade. I have momentum. There's absolutely nothing in the way. Let me take that trade and let me ride that momentum all the way down to the key Fibonacci area. I can exit at areas because they can create bounces, and it's better than hoping. And Wayne, this is an awesome recovery. The only thing that I'm going to say is you called it a weak top. And this is one of those weird instances. And I'm not sure if you're in here. Maybe you're going to catch it. But guys, we talk a lot about strong tops and bottoms in the market and how it takes a termination condition to reverse the market. This is one of those magical times where you get a huge retracement right to resistance, and your large triggers never blink. They don't roll up. Your small triggers never get above the large triggers. I am 100% on board with calling that a strong top. If price reaches resistance and you can't even get the large triggers to think about going up, that market is more likely to go down. So we could call that one a strong top, Wayne, which just adds fuel to the fire for this great trade. Oh, guys, we have Miss Savannah Novak in the room. Great. Now I've got stage fright. Guys, we saw the same thing here. Price breaks above, pulls right back to support. Triggers never blink. Market continues up. And this is gold. And gold's a little bit crazy sometimes. So let's talk about what we see now in crude oil, guys. The separation is real. I've got a gap between my small and large triggers. If the first thing I do every time I look at the market is identify momentum, I'm always going to have a market where the odds are favorable for it to push. But the one thing that I don't have, as you can see this divergence high line, I don't have any triggers pushing their way through that area. And what this says is, hey, because there's no triggers pushing through this area, we have to pause for a second. We have to wait. That area is not giving any indication of a break. The same way it gave no indication here, the same way it gave no indication here. And what you're seeing is that rule number 2, letting you identify areas that could stop and create a bounce, doing it beautifully, and putting crude oil in a little bit of a range here. What we're going to look for are these right here. When you have odds favorable momentum, when you have those strong triggers, when you have that separation, guys, and 3 triggers through the area, that tail happens to be right here on a smaller, faster chart, and it pulled a little bit below everything. But we're looking for these pullbacks, guys. We're looking for these opportunities to ride it up, take it to the next area. That one did not set up very nicely, did it? Does it feel awkward? It feels awkward a little bit. I'm not used to getting right into charts, guys. I'm excited to get right into charts. I think this is what you guys want to see, isn't it? You guys want to see the market moving. You guys want to see trades. You want to see 145 tick drop in crude oil right out of nowhere, Pete. It happens sometimes. So we're going to go back to Cav's picture here. This termination, no triggers through, and look what the market does. The market bounces up. It creates that separation. That's that momentum that we're talking about. And he's got 1, 2, 3 triggers through the area. He takes a beautiful little pullback, hoping the area breaks, gets paid quickly, and then sits on his hands. Great trade. Really nicely done, Cap. So guys, I want today to be a little more interactive. I want you guys to tell me what you want to talk about. Let's go find real world examples. Paul says price touches the divergence high line, termination condition, large triggers, strong top, but until support resistance fibs are busted, tops mean nothing. I agree. So this strong top, this termination that reversed the market was awesome to get you to that next fib, right? And then with all that momentum, that fib stopped it cold with the triggers above, and now we're seeing the same thing. And what you're doing is you're seeing that termination condition rule, keeping you out of a market that is consolidating. It's all trigger location, all trigger location. And then guys, the same is going to be true when we come to TradingView. When you can recognize these areas, these key areas in the market, guys, this is one of those zones. Even with that momentum up, if you're just looking at trigger lines and you're saying to yourself, where are my triggers? Well, they were remaining below that area. Maybe I shouldn't trade into it. Price pulls back, hits a mid-band, triggers stay above. You're looking for more up. Price reaches a divergence high, triggers stay below. That's when the market pushes down. And guys, this is a recipe that is consistent. This is a recipe that Nexgen has been using over the course of 30 years to help keep you in a position where you have more advantages than disadvantages. Do you see it here? When it comes back to those yellow 1-to-1s, the triggers get above it, and sure enough, the market goes up. I'm going to reference TradingView a lot because I think this is where a lot of you guys are headed. Smalls, 3 triggers above support, guys. No reason to think about short trades on this chart, even though your small chart is showing a little bit of change. Trading with the big charts tends to pay dividends. And there's that gold. Price reached the 1-to-1s. All your triggers remained above. Not only the 1-to-1s, couldn't break through the area, and the market is heading back up. There we go, off resistance. Can you guys give me a why? Are you getting this lesson? Because your trigger lines are going to tell you 90% of what you need to know. They're going to define momentum for you. They're going to let you know when there's trouble in the way. All you have to do is listen. Just listen to those trigger lines. What are they telling you? Let's go to another market, see what we can see. There's the S&P. Your TradingView chart said everything was likely to go up, and sure enough, everything's going up. Pretty cool, right? Pause at the fib, look at the retracement. Pause at the fib, look at the retracement. And then guys, if we're just using trigger lines, this area of support is more likely to hold the market to continue up than it is to just break and go down. 100% based on the trigger lines. So when we're coming through and we're talking about those 3 concepts, I'm going to have to do some pictures here for sure. Every time I go to the rules, the very basic rules, the high probability trend trade rules, that's from the wrong page. We're talking about a market where first we look for momentum. And the idea of momentum is 100% trigger lines, guys. The idea of momentum is nothing more than that separation. It's that separation between small and large. It's that separation, that gap. It looks like scissors that are open. Once you can identify momentum, and guys, for most of you, it's going to take virtually no time at all. That's when you head to those termination conditions. This is where trigger lines are going to tell the story. This is where trigger lines are going to say, hey, none of them are through the area. Let's sit on our hands and wait. All of them are through the area. Let's look for opportunities to go long. 3 of them are through the area, guys. It's got the potential to break, but until we get more through, it's okay to sit on your hands. And then there's a couple different entries that you can take. There are high probability trend trade entries, guys. There are medium probability trade entries. There's momentum trade entries. A lot of you guys, when you have momentum and nothing in the way, oh, there's something else in the way there. You're looking for an opportunity to just simply get in and ride that momentum. And that's what Ron created. That's called the chili dog. So we're going to go through and we're just going to see if we can find some opportunities today, guys. We're going to talk about it. And we're going to compare Renko and TV. Renko says everything is up and everything is up strong. And then when I look at the S&P, everything is up and everything is up strong. Should be obvious. We're only going to go long. When I need a subject, we could talk about momentum trades on the 5-1 during this crude range. Absolutely. Absolutely we can. Let's go to crude oil and take a look. That's gold. All right. So momentum trades need momentum. That's got to be the first tip. And when we talk about the Nexgen momentum trade, Paul, there's a couple things that happen. And let me tighten things up or make it a little easier to read. The first rule for the momentum trade is the termination. So it doesn't have to reverse the large triggers, but you have to have a termination. And then you've got to have room to your target. So from this termination, Paul, no opportunity to get down to that next fib, to get to that divergence low. But coming off this divergence low, I want you to see what happens here. Large triggers roll up, but the small triggers are coming. And when these small triggers are coming, Paul, your opportunity is let them break above a line and buy the snap back to the line right there at the triggers. That would be your momentum trade to run it up to the next fib. Does that make sense? So you have momentum on the small chart, and it's just a quick little snapback. And let's see if it gave another one through here. Small triggers didn't get through the line. No opportunities coming off of this one just yet. But if we were going to look for it, this is where we're looking. Whoops. Before we reach the next area, I need that little pop back right here to the mid band, right at the large triggers. And I don't know if it's going to happen or not, but that's what it's going to look like for you. Small triggers break the area, snap back to the area, look to ride it to the next fib. So we'll see how this one plays out. We've got our termination. The challenge is our triggers are still up, and there's not a lot of room. Does the entry make sense to everybody? First, you have a termination. Small chart shows you that you're going down. We're looking for just a little snippet before we hit that blue fib. And that's one of the ways, Paul, you can capitalize on these range-bound markets. We'll see if it's set up over here. The key is you have to have a little bit of running room. You have to have room to make money. And this one, again, not much room going on, not much room coming back. And once we hit that fib, it's party over. But see how the small triggers are down, the large triggers are down, the mid band is down. The large chart isn't giving it yet, but the small chart's giving the opportunity. So that's kind of how you'll do it. It's the tighter the range, the more difficult it'll be to find that opportunity in between the ranges. A little more running room goes a long way. Guys, there is odds favorable momentum. There's your clear path. A lot of you are just buying the market right here. And you're saying with momentum, above everything problematic, I'm going to try to jump in and I'm going to try to ride that momentum. I'm just going to carry it up. This is what we call the chili dog. And I'm going to tell you guys, as long as price stays left of these small triggers, you're in the good. It's a quick profit trade. It's a high momentum trade. And momentum and clear path, guys, absolutely nothing in the way. That's the trade. It's not a Nexgen trade. This is one that you guys came up with. This is one that you guys taught in the room. And all it says, if everything's going up strong, let's see if we can go up with it. Quick profits, exit, get in, get out. And as long as I don't get a close below these triggers, guys, that market's going to continue up. That's one of the great things about these strong triggers. They push the market. Did I do it right, Ron? So let's talk about, pretty much. So let's talk about one of the realities of trading, guys. You will take losers. There will be losers, and if I'm going to be a little more live in this room, I want you to be okay with the idea that every now and then I'm not gonna win. But what we'll do is we'll talk about the whys. With all this momentum, with absolutely nothing in the way, and with price above anything that could create a bounce, the great thing is this is a market that's more likely to go up. If it snaps off of this 60-59 1-to-1, that is actually the next gen momentum trade as well when the rules are met on the charts. Some of you wait for that one. Well, that was an accident. And if the momentum fails, very often it turns into a trend trade. So you can go through and you can just gauge and you can talk. What am I looking at? Is it good? Is it bad? Is it fast? Is it strong? Everything still says up on the S&P on TradingView, guys. NASDAQ coming right into areas. Trigger lines remain below. And look at the retracement over here on the 1 minute. Gold, same thing. Hit the area, triggers above. Look at the reaction to the upside. With everything up, there's an HVA long to capitalize. And then you crude oil traders, look at that floor that's being put in there. So Paul, I know you're a crude oil trader. Let me get these up. This is where TradingView says, hey, look, we've hit all these key areas. Things are starting to change, but there's no reason to fight momentum on the small chart, and you see that in that range-bound market. And sure enough, everything's up. It bounces off the midband. When momentum trades fail, they very often turn into trend trades. So this is awkward not doing the 101 stuff, guys. It really is. That's okay. We're going to go through and I'm going to find some stuff and we're going to talk. We're going to talk about pictures, guys. We're going to talk about a lot of different things. Momentum. I want to cover momentum a little bit, guys, because momentum is where it's at. Momentum is strong triggers, guys, and strong triggers is that separation. No, Jen, we're just trying something new. So one of the things that we've noticed, there have been observations from the sidelines, is that 99% of my class has seen the 101 spiel 100 times because I've done the same thing for 10 years. And we burn the whole first hour and we just look at the same things over and over. So what we're going to do, guys, is we're just going to try and take those 101 ideas, the idea of strong triggers, and the market opens in 3 minutes. So hopefully we'll have some good movement, everything happening. But we're going to go through and we're going to talk about the strength in the market. So Jen, we're going to try and do a little more live analysis. If rules are met for trades, for the high probability trend trade, for the 50-50 trade, if the rules are met per the KISS plan, we'll take them live and see how they turn out. But we're going to look for strength today, and we're going to talk a lot about and we're going to talk a lot about trigger location versus the areas, guys. Expectations. Not that we can predict the market, but we can certainly say this is where the market's likely to go with this giant push. Here's your opening, guys. And they're strong, and there's your trend trade, and they're right in the area. And now that they're at the area, this is where we start asking ourselves, where are the triggers? The trigger lines remain below Fibonacci resistance, guys. In the moment, you have to say to yourself, 4 triggers below an area, this area has the potential to stop the market. It has the potential to create a bounce. Absolutely no more long trades into that area. Does that make sense? We're looking for strength, and we're just making sure there's nothing in the way. And gold is doing the exact same thing. And then there's crude oil still trying to break out of a range. And we'll just go big chart here. Price reaches resistance. Where are my triggers? My triggers are below. No reason to trade into that area of resistance. Price reaches Fibonacci support. 3 triggers get through, guys, and there may have been an opportunity there that needs to be managed. Because there's 3 triggers through, I'm going to circle that up bar, and we're going to see if there was an opportunity to make some money. When we get to resistance, nothing to do, nothing to do, nothing to do, nothing to do, nothing to do. Holy smokes. And now as we come into Fibonacci support, guys, we don't have trigger lines through the areas. We're at the bottom end of that range, and we've got to sit still for a moment. We've got to wait for a minute and say, okay, let's wait for the best of the best. So while we wait for the best of the best, let's go see what that circle looked like. Guys, there really wasn't an opportunity here. Not at that potential to break. Don't have strength. Maybe a little something there. And maybe not there either. Crude's in they're in war mode, aren't they? Crude oil's in the people are getting bombed in the Middle East mode. Just for a moment, it'll probably break out. And Paul, yeah, I know you're used to looking for trades while I talk, but what do we see in crude oil? Like if you had to say, if we went through the idea of what I can see, and let me take an actual picture. Let's just do the chart read, because maybe these live chart reads will be beneficial to you guys. I have strong triggers. I have separation between the small and the large guys. This lets me know that there's a pretty good amount of force pushing down. The challenge with the look, if you were looking for a trade, is that you don't have room to any targets. You've already reached your target, which means that it is a termination condition. And a termination condition just means that price reaches the area and the triggers stay above it, which is exactly what's happening right now. And if you look at your smaller, faster chart, you can see the reaction as they come into this area. You can see how you get 5, 6 up bars. Guys, that is the buyers testing the waters right at a key area. Whether it is sellers taking profits or buyers looking to enter, this is the red flag that Nexgen provides you. This is the, hey, let's relax for a second. And the recipe's consistent, guys. Every time price reaches an area, you just ask, where are my triggers? Your trigger lines will tell the story. The exact same way they told the story up top. Does that make sense? Do we have newer people in the room that are like, what is he talking about? Is this a short trade? I don't have rules for a trade here. I don't have a clear path. And then Paul, when we were talking about the other day about, well, what if I choose to trade into a termination condition? Are there things that can tell me, hey, maybe a better chance? Well, strong triggers into it, maybe a better chance. But a loss of momentum, weak triggers, you're really giving away the advantages. If you're looking to break rules, guys, this probably isn't your best look to break rules. And we're going to see what the reaction is. We'll see if they just come up and test resistance. We'll see if they decide to smash through. But this is a sit on your hands look. This is a hey, let's just wait for it to be better. Guys, if the area is going to break, the trigger lines will get through. If the area is not going to break, the trigger lines won't. Which means your triggers are going to be your patience piece, guys. Your trigger lines will tell you, pump the brakes, pause. We may get a reaction up. And your trigger lines will tell you, let's see if we can find a live market. Look at that. Even with all the momentum, absolutely no reason to trade into the area, avoidable loss. And now the market has made a move off of support. It's pushed up. It's come back. It's pushed up. There's your termination condition above. And we're waiting. We're waiting to have that momentum to couple it with the path to find a way to enter this market. Ron says, when I have all of this momentum and nothing in the way, I'm going to take a shot. Top hard as a watermelon. Cleared the mid-band. Odds favorable, both charts. That's the one I was trying to show at the top that didn't work. That's the chili dog. Nice trade, Ron. Great job. So what do you do? If I can't trade into support because all my triggers are above it, and I can't go into this divergence high because all my triggers below it, guys, this is your patience piece. This is your sit on your hands. This is the wait for things to line up piece. And they will line up. They always do. Joel, everything says up. You take the entry just below the mid band. It's a pullback inside of triggers. So there's the momentum trade, right? You tried to jump the Didn't work. Great management. And then it bounces off the mid-band and just heads up. And I don't see your entry for the second one. I see the first entry. And then the stop. Oh, maybe you took a second entry somewhere. There it is. As it comes down to the mid-band. And just ride the momentum. Nice trade, Joel. When it looks like this, guys, you're going to find a way. When there's momentum and nothing in the way, you're going to find a way to capitalize. From termination to termination, from fib to fib. Guys, they tell the story. Now the market's starting to roll. Our triggers are starting to come up. We see problems at 62. If price reaches 62, guys, we're going to let our triggers tell the story. Until we get there, let's take a look. Gold, big bounce, Fibonacci support. Where are the triggers? We're going to do this all day long, guys. Area reached. Where are the triggers? The triggers are above. No trades into the area. This is how I speak when I'm trading every day. Guys, support hasn't broken yet. Now the smalls are getting through right into those darn one-to-ones. Is this going to be our crude breakout? Who's having a little, and I love this. This happens a lot, guys. Who's saying, man, I could have taken this trade. I could have gone short. I could have made money. Is anyone in the room having those regrets right now? I'm going to need more coffee than normal. Nobody? Nobody said, man, I knew that was going to happen? Well, you guys are making it hard to give the example. I want to talk about why we discuss the trigger lines like we do. Because if you look at the big picture, if you zoom out, what you find is that more often than not, those trigger lines not breaking through an area creates a challenge, create a stop in the market. It's okay to wait. The easiest money that you ever make will be made below areas, trading 2 areas, above areas, trading 2 areas. They're trying to break out of the range, guys, but prices into one-to-ones and the triggers haven't broken. And once again, I'm just in this holding pattern. I'm in this, man, if I could just get a clear path, I'll look for an entry. Oops. The S&P is trying to break above, guys. There's that termination. There's that termination. And now we're starting to get that push up. We're starting to get that little giddy up. The small triggers are coming up. And we're going to see what they want to do. Do they want to get back up to this key area right here? Very often when there's a fib looming, guys, and they don't make it, that's exactly where your buyers are hoping to get. Sellers tested, profits taken, and now they're starting to change directions again. Just need to get over one little hurdle. What do you guys want to talk about? I recognize every name in this room. Crude oil shows no determination to get serious trading. Crude oil is showing a fight right now, Paul. Crude oil is showing the battle between buyers and sellers, the battle between the people that have more influence than us. And I'm going to tell you guys, this is where fortunes are lost by traders trying to predict the breakout. And here it comes. The smalls are through, 3 triggers of the larger through. We have momentum, 3 triggers through. Guys, now we're just going to say, all right, let's see if they come get us at an area inside of triggers. A lot of hedgers trading in crude now, yeah. Guys, I've got a termination. It reversed the market. It gave me odds favorable momentum. So entry rules say, if I get a reversal bar, I'm going to have to pick an area inside of triggers. Whoops, that was the wrong one. Somewhere between this midband and that resistance. If they pull back for us, that's where the market's most likely to bounce and continue with momentum and path. 1, 2, 3 triggers through the area. All I need is for the market to come get me. If they do come get us, guys, your KISS plan says that your stop goes where the market should not. Pete, you're already in it. Nice. I had to wait. My rules said let the triggers get through the area. If we get filled at 73, guys, my stop has to be up here around 73.12. The further these triggers get through, the more I like this trade. The smaller my window of opportunity becomes. And if they don't come get me, man, a pox on them. That's the part I'm not in control of. I'm not in control of whether or not the market retraces, whether it pulls back, whether it hits that area inside of triggers and continues down. I'm only in control of whether I have the momentum that I need, whether or not my path is clear or working to be clear, and can I identify where the market is most likely to continue. And guys, when we're looking for entries, entries happen at areas inside of favorable large triggers because trigger lines, if you look at it, this is where the market tends to return. The market loves to come back to trigger lines. And when you put areas inside of those trigger lines and the large chart is strong with nothing in the way, this is where the market is most likely to bounce, guys. So that becomes your entry for the trend trade, a tick or two below that lowest point of resistance inside of triggers. Guys, if they come back for us in this scenario, we will have a whopping 4 or 5 ticks of risk on a trade because the resistance, the mid band, if this market is really going to continue down, that's the most likely spot. So I'll put an entry 2 ticks below it and wait to see if they come and get me. Does that make sense? Large chart says down. Triggers below areas. Smalls are still outside. Let's see if they come get us. We'll make it a low risk trade. We're in right at an area inside of triggers. Predetermined targets, guys, $100 and $200. Does the pattern guarantee a winner? It does not. What it does is say this is a pattern that with these conditions is more likely to go down than up. And we'll see if crude oil wants to go down instead of up. My stop is 4 or 5 ticks above the trigger lines because if they get through that retracement zone, guys, I don't want to be in this trade anymore. So now I'm 100% powerless. I made sure that the large chart said down. I made sure that the smalls were still outside. And we got through the area. And now we just need the sellers to do their job. Are they going to push it down? I don't know. Where's my first target? $100 away from this entry, guys. And if I get a reversal bar, I can reduce risk a little more behind the reversal bar. If it pushes down, great. If it doesn't, not my winner. And where are they most likely to go if they push down? Guys, we're looking for Fibonacci support down here. They've broken out of their range. The sellers are clearly in control. This Fibonacci area is a very likely target. And you could even take this and say, let's see if they get there. I'll take quick profits if they push down, but that next one, I'm going to hold for the distance. Let's see what they do. Is everybody with me? It's not a coincidence that the market bounced right off the areas inside of the triggers with this look on the chart. My stop is where the market shouldn't go. At this point, if they come back up, I may not want to be in this trade. If they go down, we're going to get paid. This is the part that I'm not in control of. But I have 6 ticks of risk, $60 of risk per contract on this particular look. This is all we do all day long, guys. All of the filler talking that I'm doing, this is stuff you should be doing in your head when you look at the market. Do I have the smalls outside of the large? Are my trigger lines getting through the areas? 3 triggers creates an advantage. Can I enter 2 ticks below the lowest point of resistance inside of triggers? They're confirming that the market is going in the direction of the trend of the momentum of the path. Now we're just doing our thing, guys. We're letting the market do its thing. It's either going to win or lose. I never know. Double bottom, termination. It's up, strong bottom. Since my chart looks like this, it didn't enter the short. No worries. You've got a big old fib right there. Are you still on 7, Paul? Yeah, the software is the same. Like the algorithm, everything is the same. but it could be a tick data thing, and it could also be my charts because I change my charts a lot based on just lessons that we do. I pull templates off, put templates on, do all that sort of stuff. Guys, look at the fight that's going on right there. Decisions are made at these areas, guys. People enter, people exit, areas break. The reality is, when you're right over these areas, all that pause that you see, all that fluctuation, that's the buyers and sellers duking it out. So we're just trying to have an edge. If everything says down, my edge is down. I'm going to try and go down with it. It's a low risk trade. It's from the right spot. It has the right advantages. We just got to see who wants it more. Is it going to be the buyers? Is it going to be the sellers? Well, looks like the buyers got this one. I'll take 120 on that look all day long. Understanding the concepts of where the market's most likely to continue, guys, it allows you to manage these aggressively. It allows you. You have T3 13 range chart, big fit on 13. I could build 100 charts. Let's see if TradingView was any help on that short. Was that the S&P? No, that was crude oil, wasn't it? So there we go. For you guys with TradingView, you had an advantage. You had a zone right at an outer band and absolutely no reason to take that short. And this is kind of the cool thing, guys, is you're going to have opportunities on both. You're going to see opportunities using minute charts. You're going to see opportunities using Renko charts. And you've got to treat them differently. There's times where you guys will find opportunities over here that don't necessarily line up. But do you notice how we made it all the way back to the mid-band? We've got our 10 a.m. fib update, and all of the triggers are below the areas. We're not going long yet, but we don't have what we need for shorts anymore. And we'll just see what happens. Well, they made it back to the fib. The triggers didn't break, and sure enough, they bounced down. And then, Paul, there's your momentum trade right there. Termination, strong triggers, snap back to the mid-band or an area right inside of them. And that was your momentum trade to go short. Do you see it, Paul? For you guys looking to take those momentum trades, textbook. Been teaching that one for 25 years. Awesome. And we'll keep looking for those. We'll keep looking for opportunities. Right to a mid-band inside of triggers. Only challenges, the triggers here didn't quite give the story. We're working that way. We're working that way. Guys, what do you want to talk about? Everybody always asks me for the live market. What's the live market? What's the live market? Nobody ever wants to talk about it. Termination reverses the market. I'm going to call this a strong top. I have all the momentum that I need in the world. Small's below the large are wide, and my large are getting below this reversal bar marker, which takes the mid-band out of the equation, guys. So now we're looking for an opportunity. Same thing we did before. If I get a reversal bar, I'm going to look for those areas inside of triggers. I can put an entry just below the lowest point of resistance. And the hope is that they come back, grab me, and finish the move down to the fib. Guys, this is your high probability trend trade again. Termination, strong triggers. With those strong triggers, guys, we haven't reached the next area. We've cleared the previous. All we need now is that small chart to give us the entry. The entry says wait for a reversal bar. We haven't gotten it yet, but we've already called our shots. If I get a reversal bar, where is the market most likely to bounce and continue with all that momentum and path? Guys, it's most likely to happen from the lowest point of resistance inside of triggers. The only thing I can't control is whether or not they come back for me. We'll see what happens. Good morning, Miss Cindy. Nice to see you this morning. Joel, momentum, path, perfect entry, great management. They can't all work, but boy, you manage the heck out of it. Great job there. And here's the thing. If they touch that blue line, guys, it's game over. Because then price reaches the area, and I have to wait for the triggers. This is one of those not my money scenarios, but Paul, there's your momentum trade once again. Strong triggers on both charts, breaks through the area, snaps back. You guys see it? Breaks through, snaps back to the 1-to-1. So we're seeing a lot of momentum opportunities today. We're not really taking them, not together. Price reaches the fib, the 1-to-1, the divergence low, and I don't have the momentum that I'm looking for to break it. Remember when you thought that day trading was going to be like constant activity? I'm always going to be in the market. I'm always going to be in the market. Guys, you're not. You're going to wait for advantages. One of the things that happens when you have so many charts is you're going to miss out on some stuff. So we didn't have a termination that reversed the market, guys. This is kind of coming from the middle of nowhere, even produced a failed trend trade. And now we're into the resistance, and we're saying to ourselves, where are the triggers? And the triggers, small and large, are all below resistance. Guys, when it's not a termination condition that reverses the market, they still may be looking for that blue fib. We're going to wait for the reaction at this fib right here. There is the chance that the sellers are going to say, you know what? We tried to hit the fib. You guys fought us a little bit. Maybe we're going to unload and try and get there. And very often from a weak bottom, what we call a bad bottom, which just means that the market came from the middle of nowhere, you'll see that continuation down very often. It's never guaranteed, but it means that I'm not looking to trade into resistance with all my triggers below. Walking the dog. Strong triggers, clear path, money again. You chili doggers, this is your day with these strong moves today. Nice trade again, Ron. So now we're in a holding pattern. Was that crude or ES? That was crude. So let's go see what crude looks like over here. Into the mid bands, into resistance, triggers down but into a zone. Sitting on our hands. Not 3 triggers through, and there's your bounce on the S&P. So both platforms, guys, whether you're looking at Nexgen Rinko or whether you're looking at the 1 minutes on TV, guys, both of them said pump the brakes on longs. And sure enough, pumping the brakes was the right thing to do. That's one of the things that I think is so amazing about what we do here, guys. You can literally, I won't say predict the market, but you can look and understand what is most likely to happen, where the opportunities may fall, and you can do it with the simplicity of just fibs and triggers. Fibs and triggers, and there we go. The sellers right at a key area, no triggers through, said let's try more down. Pretty cool, right? Any questions? You guys good? You want to take 5 minutes? I'll leave you guys with crude oil here. And we'll see. This is the decision-making zone, guys. There's momentum up, but there's no clear path. So we're in a hold zone, right? Alex B, nice to see you in here. All the momentum. Potential to break. I could have. I know, right? Got out here because the resistance here. Do not remember seeing them on your chart. I didn't have them on my chart, Alex. Always, always, always trade your charts. Great looking entry. And just a quick exit. Looks like you just grabbed quick profits because of resistance. Nicely done. You had fibs and you traded right to them. Nice trade, Alex. Todd P loves momentum. So Todd P, the only thing I can say about this bad boy is when you trade into things that can create a bounce, you've got to be aware and ready for the bounce. When you trade from things that can create a bounce, you're less likely to get the bounce. But beautiful trade. Momentum, momentum, and ride that momentum down. Awesome job, Todd. No gap working on the ES, Ron. That happens sometimes, Todd. That's why the other reason I'm such a big fan of TradingView. TradingView doesn't crash. And we've got plans for both. Right into the area, weak triggers, bouncing up. That's my only challenge with NinjaTrader is it does crash from time to time. And this is your pause. Let's see what's going to happen. Pretty cool, right? Right at Fibonacci. You can see the losses of momentum. You can see those triggers rolling. Gold is just railing to the upside. Triggers break, comes back and behaves as support. Bounces off of the fibs. These tails, guys, those are the fights right at the key areas. You can see them happening even on the large chart. Paul, since your chart looks like this, you didn't enter the short. I think that's a good reason not to enter the short. And that's not the momentum, Paul, because you don't have any momentum except up. So when you're looking for the momentum, you want those smalls to be below the large. Let's see if it sets up. This is more of a momentum look right here, but it's directly into fibs. Yeah, OneDrive, you just learned that. I think it hasn't been talked about in a while. So, Todd, one of the things you can do, and I'm not sure if you've seen this yet, in the user guide, there is a NinjaTrader best practices. And it talks about the things you can do with your power settings, things you can do with your graphics settings, things you can do with OneDrive, all that sort of stuff to reduce the likelihood of crashes. So, Paul, if we were looking for that momentum trade, Paul, we really want to get below these trouble spots right here. At least get the triggers through the area and then look for some sort of snapback rather than trading directly into Fibonacci support. And there just wasn't anything to get down to that area. That was a little premature because nothing had rolled. Big fight right at the area. Gold is railing. And crude oil is making decisions. All right, guys, I'm going to walk away for a few minutes. If you take a trade, post it in the room, guys. If there's a concept that you want to talk about, if there's something that you're interested in discussing, let me know what it is that you want to talk about, and we'll do it. I will be back in just a moment, and we will continue. All right, guys, coming back into it. Looks like the buyers wanted it more, didn't it? And that happens sometimes, and you get caught up in these ranges. Paul, you said, sorry, I didn't mean momentum. It was a quick stab back coming off the termination. With it's enough away from price to run to those large triggers, quick profit entry. Did not take it, but it meets rule. I'm not sure what rule that meets. Price does return to large triggers, and your large triggers look completely different than mine. So I'm not sure. Look at where your large triggers are, that pullback coming. My large triggers were right there at it. One of us is off, and I'm not sure which one of us it is. So I'm going to right click and I'm going to go to my templates and I'm going to reload a template and make sure that I'm not. Do you have a different set of indicators on your chart? Did you change something? And maybe we could get a tiebreaker in the room. Can anyone show us a picture of their crude oil right here around 950? No worries. And then let's talk about something. And I'm not saying that I see rules met either way, but Paul, let's think about something. When you reach that fib, can we agree that everything's set up, right? So definitely not going long into the fib, not right there. But when we reached this fib, can we agree that everything's still set up? So instead of trying to fight everything to make a little bit of money on the way down, maybe there is a possibility to fight nothing and look for an opportunity on the way up. And I think this is that patience piece because neither of these have a clear path, right? So if I'm going to trade without a clear path, maybe I should trade with all the indicators. And large triggers are so good at telling the story. If you get this full pull and there's no blink, like it just doesn't do anything, I love that. That suggests, hey, the market's probably more likely to head up. And if you were going to take a shot, you had room to retest trouble. Good stuff. Oop, and we saw this one, Alex. Did you mean to post it twice? Sometimes they stick to the clipboard. Oh, and yeah, Ron, yours look like mine. Thank you for that. MT charts at 950. Oh, your chart's at 9. Oh, okay, thank you. Not quite. We didn't quite get there. We were looking for that one right there. Yours was back right there. Thank you for that, Alex. One of my favorite things that John Novak talks about every now and then is the idea of trading is like a bar fight when you're looking for advantages, guys. And if you start just talking through it, right? What do I see? Well, I see a market that's pushing up. Do I have momentum? Well, I don't have the best momentum. Are there things in my way? There's all the things in my way. Do I really need to take this trade? Or can I put myself in a position to be just a little bit patient and see if something good happens? See if it gets that breakout, if it gives me that opportunity. Let's pull up the S&P again. I crashed on break. I know you guys saw that. So Cav, this is NASDAQ. Great termination, momentum down, perfect pullback right to resistance. You get paid on the way down. That second divergence pushes you up to another entry. And down it goes. Great job, Cav. Nice trade. Right to the area inside of triggers, potential to break. and quick profits. Nice. This was this morning. Messy. Large triggers stayed up. They most certainly did. You take the shot at it, make some money. Nice job. And then let's see what happens. And that's a good example of it. And that's early this morning. Price pulls all the way back to support. All the way back to support. And nothing blinks. Triggers tell the story, right? More likely to go long. But from where? You're like, I don't know, but everything says up, and these fibs are likely to hold, and you just hold. Perfect entry, exit. Because of the large chart, you held through. Because the large chart didn't blink. Perfect, Jen. Those are hard to hold through. You definitely have to trust a large chart to hang on to that trade. And you did. And the large chart never said down. Your small chart had some little changes, but there's a good example of why taking a momentum look into a fib rarely works. Difference between 7 and 8 data, maybe? Oh, that was your 13.2, Paul, not your 5.1. I don't know, because I believe our 13.2s look the same. Something with the math on your, and I don't know what it could be. You could ask Jason, but it looks like, let me look at your chart again and see if I can. I'm trying to figure out if you're large or running the calculations from the large here. It is a different look. Maybe between data, but the ticks all look the same, right? The fibs are the same. The ticks look the same. The bars are the same. It's just that one moving average that's off. You could ask Jason if he wanted to take a look at it real quick for you. Jen, aggressive but nice hold. I guess the buyers did want that fib, didn't they? The sellers fought it, and then the buyers took over and went to it. Wouldn't it be fun to know what was going on in the minds of the people that run the market? Everything is down. Everything is below the fibs, all of the triggers. As it pulls back to the fib is more likely to hold down than it is to break. This, ladies and gentlemen, is what we call a strong trending market. More than 30 bars in the same direction, just waiting for an opportunity. Waiting for an opportunity. Guys, let's see what TradingView says about the markets right now. NASDAQ coming off of an area that 3 triggers couldn't break. Had a huge push down right to an area with all the triggers above it. There it is. That's all we're going to look at. Triggers and zones. 3 triggers through the area. It pulls back. More likely to break than not. You just had to look for an opportunity. Wait for things to roll. We'll see what happens. Gold has gone crazy right to an area. And you can see the reaction off the area on the 1-minute chart. And then look what crude oil did off of that zone. Pretty cool, right? This was a great indication for more up because of that zone. And that's exactly where it came from. 1, 2, 3 divergences in the same price range supported the idea that this would be a bottom. What is E mini S? ES, the S&P? Probably, Todd. The S&P. So you got CL, crude. I need to wait. I'll wait. ES. No problem. Guys, nobody's taking trades? That's okay. Then I don't feel bad about not taking trades either. You copied my trade a bit ago, but my limit orders are set up one lower than the other. Is there a way for me to fix that? Yes. And Kathy, don't copy my trades. Because sometimes I might take trades to lose intentionally to prove a point. So I'm gonna stress that. If I trade in the room, I'll talk through it, but remember, it's your trade. Don't copy my trades. Take Kathy's trades. So you said you have one lower than the other, your limit orders? Oh, your targets. Okay. So let's do this. So let's go custom. Go to your drop down and hit custom. Do you want to set it up for the S&P or for crude oil? Because the ticks are a little different. We'll set it up like that KISS plan, having two targets for crude oil. Okay, so I'm going to make sure that my order quantity is 2. And then what I'm going to do is I'm going to hit add right here. And that's going to give me 2 targets. So I'm going to go 1 contract on my first target, 1 contract on my second target. Stop losses on crude oil, I like 12 ticks because it gives me time to put it where the market shouldn't go. If we're doing 100 and 200, it's 10 ticks on the first profit, 20 ticks on the second profit. So let me get you the picture just so that you have one. And then you're going to do save as template. So you may call this Kathy's Money Making ATM. And now what you can do is you'll be able to find it in your drop down. Did you get all that, or you need me to go through it one more time? Because I'm happy to go through it again. And guys, you can set it up to do whatever you want it to do. You can set it up for 2 contracts, 3 contracts, 10 contracts. It doesn't matter. So you're going to start fresh. Drop down menu, go to custom. We're gonna custom build Kathy's ATM strategy. Order quantity is 2, which means that you're going to want 2 targets if you need them to split. And you have to click this add button. And so what it's going to ask you is, okay, for target 1, what do you want to do? Well, I want 1 contract. I want the stop loss for that 1 contract to be at 12 ticks. I want the profit target for that first contract to be at 10 ticks. And remember, 12 ticks isn't your stop. It gives you time to put your stop where the market shouldn't go. So that's what's going to happen on the first contract. The second contract, well, I want the stop in the same place. That way I can move them at the same time. But I want my second profit to be at $200 at 20 ticks. So it's order quantity 2, 2 separate targets, 1 contract each. So whatever this number is here, you have to have that many represented here. You put in your conditions and then just save it. We'll call that the K. So when I get in, now I've got my K. And if I hit buy market, I've got those split targets, but my stop is in the same place. So the stop is the same for both, but the targets will come through and they'll be split. And then let me see, just for grins. Instructions. You'll know what those are, Kathy, but Rick will have no idea. These are called instructions, so you can go through and build them. You're so welcome. I had to have my wife tell me. I was like, what's this piece of paper in the box? She's like, it's going to show you how to put that grill together, Mark. So guys, when you have a strong trending market, your strong trending market is over with a reversal bar. That's it. Now we're back to looking for the momentum. Now we're back to looking for the clear path, and we're just waiting for the opportunity. Waiting for the opportunity to capitalize. Crude oil made it to their fib. And look at it drop once it did it. Crude oil's not playing nice today, guys. There's a lot of patience. There's momentum opportunities in there. What would you guys like to talk about? I'm sipping Gatorade and looking at smiling faces. What's on your mind? Oh, I'm sorry, Todd. We had yours, huh? What is fast light workspace? Where do you see that? Where do you see fast light workspace? I don't know what that means. Is that something that you have in your lineup? Like when you go to workspaces, is that one of your options? And guys, just a heads up. I don't know. Click on it and look at it. If it's a fast light workspace, Todd, my guess is that it won't have, it probably won't have tick replay, and it'll probably be fewer days back. That's going to be my guess. When the markets were going really nuts, and there was so much tick data coming in, John may have created a couple workspaces that would open quicker for people that don't have supercomputers. That's probably what it is. Fast light workspace, faster load, less tick data coming through. If I had to guess, open it and see. It's like Christmas. What's behind the wrapping? But I bet you that's what it is. So guys, my crude oil chart has momentum right now. There's a separation between the small and large. It looks like scissors that are open, space between the two. Momentum is absolutely screaming. But price hit this fib and this fib, and my small triggers haven't begun to break through. And one thing I notice on my small chart is that there's the fight right at the key areas. So we're in there. Chris rebuilt your charts. OneDrive was messing you up. Okay. So when he rebuilt your charts, he would have gone back and reloaded it from the resources page. So John Novak builds all the workspaces, everything. And when Chris redid it, he reruns the indicators. And when you rerun indicators and you do them fresh, it gives you every workspace that was in John Novak's brain that day. And sometimes he's got custom stuff in there for people that have asked. Sometimes he's got higher time frames and crypto and all that sort of stuff. So it's probably one of John's brainchilds to help users that were struggling with the overwhelming data on the S&P at the time. I'll rebuild mine today. After class, I'll rebuild all my Ninja workspaces. I'll delete everything and make new ones. And I can do the research and see what it is, but I feel like that's probably what it is. Hey, Paul, do you see? Well, the small triggers didn't really snap back, but it rolls, comes back, hits the small triggers in a fib. And where did that happen on the chart? We don't have a termination condition, but that's kind of that look that keeps showing up. And that one had room to get to the next trouble spot, but because it's not coming from a termination condition, it doesn't fit the rules. Because you need that termination condition. Killing it on the S&P. Right to the fib. There's the bounce. Look at the retracement. Weak bottom. Pushes up. Large triggers don't blink. And it continues down. How many times have we seen this today? Whether it's up or down. Big retracements where the large triggers don't change direction and the market continues. Do you guys recognize that? Did you know that the market does the same darn thing every day? Big retracement, large triggers don't change direction and it continues up. Big retracement, large triggers continue down. And it continues down with those large triggers. You reloaded 5-1, took off extra 5-1 fibs on Pro Trader T3 Sen. Is that crude oil? That's crude oil that we're looking at. Whoops. Let's do the comparison. 10.15. No reason to exit, just didn't work. Momentum, path. The only challenge is your areas were not inside of the triggers at 10.15. And when your areas are not inside of the triggers, Paul, you're getting to the wrong side of things. And it was a good look, just didn't work. We're still a little different. Are we? That may be. I think we're about there. I think we're a lot closer than we were. Ron, momentum, nothing in the way. Base hit. You guys want to see something kind of cool? Mark, how do I become a successful trader? Mark, how do I get to the point to where I can get consistent? I'm going to show you. These are the last 3 trades taken by this gentleman. Yeah, it's the area. Once you get to the wrong side, Paul, but you know what? You let it reverse off of it. So you gave it the best chance you could possibly give it. This looked nice. This was a little bit off. You forced it into confirmation, and it just didn't work. That happens sometimes. Guys, I want you to see something. Odds favorable, momentum, clear path. That's a winner. Odds favorable, momentum, clear path. That's a winner. Odds favorable, momentum, clear path. That's a winner. The most successful gentlemen, sweethearts of men that I've ever worked with. Haha, Ron. Pirates, arg. Guys, the most successful traders that I've ever worked with in my life do the same thing. They have 1 or 2 trades. They are 100% in tune with what it takes to get in and out of them, and they don't deviate. And they're so comfortable sitting on their hands if their rules aren't met. And when you realize that you're in control of whether or not you enter that market, that you're in control of what it looks like when you take an entry, guys, it creates a lot of patience, especially if you've taken the time to recognize a plan that gives you the opportunity to win more than you lose. Paul, termination, there's your momentum trade. right up to the fib. We see a lot of this, don't we? See a lot of that. When termination conditions hold, there's your opportunity. When price reaches resistance and the large triggers are all the way down here, it's got a good shot at coming and closing that gap. And then you have to make a decision, right, Paul? What's the direction? What's the momentum? Do I really want to go short, or do I want to let it finish out and see if there's an opportunity maybe to go up from the termination with all the direction, with all the momentum? So it's kind of cool how you can start to play that out in your head. You can start saying, this is what's good, right? This is what's bad. I don't want to trade into a termination condition. Let's see what the reaction is when we get down to these triggers. And then we'll let them make a decision, and I'll make my decision based on what my indicators tell me. And then it's just rinse and repeat. Rinse and repeat. It's amazing how difficult it is to do this when we omit an entire hour from the lessons this morning. So, what are we talking about? We're talking about momentum, separation. We're talking about trigger line relationship to areas. That's it. That is everything that we have done for 30 years. What did the triggers say when I hit this area? They said, don't go short. And what did the market do? It went up. Pretty cool. Hit it, hit it, hit it, hit it, hit it. Triggers said, don't go long. The market ultimately goes down. The same thing is true here. Same at the mid band. Same at the area. 2, not 3 triggers through, and it holds. Are you guys seeing a pattern? Does it help to break it down like this? To see it live, to say to yourself, I don't have triggers through. It's okay to not take the trade. Because I think a lot of times we see it in still pictures, and it makes it easier, right? Price reaches resistance, triggers remain below. It's okay to not go long. Some of you did. Some of you chose to go long. And you justified it through things like, well, my small chart didn't have divergence. Well, my small chart had strong triggers, right? And you said, because of this strong bottom, because of this momentum, because of that look, I'll take a shot. I'll manage it. That's okay. But you never have to take a trade and not know what you're getting into if you just keep it simple. Do I have momentum? Yes. Is there something in the way? There most certainly is. And guys, look what the market's doing. A lot of you are going to try and catch these fluctuations, these little snippets, the moves within the moves. And some of you are really good at it. Cav, see the roller coaster. What momentum? Cav says, when the market is absolutely screaming, I'll let it clear trouble. When it clears trouble, I'll jump in and I'll jump out. And I'll just make sure that I'm making a little bit of money. Gold met this morning. How about some sim? So you made $3 grand today, Cav? That's the best you could do? You're ahead of me. Great job, dude. Great job. Momentum and path. It's fun stuff. Software works, guys. You just got to learn how to work it. That's a big chili dog. The software works. If you keep it simple, if you focus on advantages, it works. Be patient. The next trade's coming, guys. Said it 100 times. They love to come back to the big triggers. When there's a termination, the triggers are down here, guys. That's the expectation. Here we go. And they're fulfilling expectations, as they do continuously. Does it mean take the short to close the gap? No, it doesn't, because you get caught in the fluctuations on the way sometimes. Big retracement, large trigger still up, closes the gap. Now they're going to make decisions. Do they want to continue down, Or do they want to go up? If I think I want to go up with these triggers, guys, I can't fight momentum. Fighting strong triggers rarely works. I don't have any areas to trade from. I can't think of a rule yet. There may be a range chart showing you an HVA, but if you're gonna take a shot, get to the good side of those small triggers. Let's see if we get a reversal bar up off the triggers. And if we do, they don't give it, right? There we go. Then we'll implement that this says up and this says up and that says up, and I'm on the good side of the triggers, and if they give me a reversal bar, I'll exit. And if they don't give me a reversal bar, we'll see if they want to continue up with all of this momentum from this strong bottom, knowing that there's trouble in the way. We'll take one off there. And as we approach resistance, maybe we go break even. But you guys see how all I did was talk it out. What do I see? I see trouble below and trouble above, but my overall look was that we're more likely to go up. I refuse to fight triggers, and I know where trouble is, and sure enough, trouble created trouble. And guys, that's a tiny little snippet. It's an aggressive little run in between areas without all of my advantages. But when you start reading your indicators, when you start talking about what's good and what's bad, that's it right there, guys. And you could have turned that into a $200 or $300 trade. Todd, market if touched is what it is. I've never used it in my life. I haven't found a reason to use it. The only time I've ever heard the market if touched being used is people that have trade copiers. Apparently there's something that goes on with it. I've never used an MIT order in my life. So, I mean, you could, I love the Googles. What is the difference between MIT and limit orders? The primary difference between market if touched and limit orders lies in how they behave when the market price reaches a specific level. A limit order becomes active at a specific price or better, while a market if touched order becomes a market order when the specific trigger price is reached. There we go. I don't have an opinion on it because I've never used it. I've never felt any, like, my limit orders work, my buy nows work. So there's things that in my trading history that I've just ignored because I can't find a need for them. And then guys, there it is. We obviously overmanaged because we're sitting in a live classroom, but big retracement, large triggers don't blink. Does everybody see it? How cool is it that you can say, be patient, be patient, be patient, okay, go, right? Be patient, be patient, be patient, okay, go with the large chart. Let's see what happens. That's trading. And guys, there's so many opportunities in the market. You don't have to catch all of them to be successful. We've got two triggers through the area. We're coming from a strong bottom. We've got momentum. And the closer these large and synthetics get to each other, the more accuracy I'm going to have if I choose to take a long trade based on the advantage of momentum and potential to break. We're not really there yet, though. Still a big retracement zone to get back to those large triggers. One trigger through, divergence, huge push, pulls all the way back to those large triggers. Do you guys see it? That happens a lot. No triggers through the area, only two triggers through the area. Guys, there's a fight. There's a huge fight happening right at key areas. There's a fight where buyers and sellers are trying to figure out who's going to win. I like to start with saying I have no idea what's going to happen. And then I start going into, well, what do my indicators say? My indicators say down. My indicators say a lot of strength down. My indicators say damn near every indicator I have says down. Let me clear some trouble. Let me get through some problems and then I'll try to go down with it. Because right now, the only thing that I'm lacking is a clear path. And I have 1, 2, 3 areas that aren't broken and 1, 2, 3 divergences in the same price range. Only 2 triggers through, and it doesn't hold. For you guys that have been with me for a while, are you digging that idea of the, is it none, is it 2, is it 3, when you talk about areas to break? I think, and I'm telling you guys, I've been taking 50 pictures a day for 5.5 years. And when John Novak started that, and he said, look at your trigger lines. Let them tell the story. 3 triggers through. Well, now it's 4 triggers through, more likely to break. The market pushes up. I don't know. It may go down. It may not. It got us. But that's a pretty good look. You know what one of the most frustrating things in the world is when you pop a trade on every now and then in a live classroom and it doesn't work, because there's some of you that are saying, well, this stuff must not work. Guys, that's not the truth. They just don't all work, and because I'm splitting my time, it becomes difficult. Placed a limit order inside the triggers, mid-band, and the one-to-ones. Place stop just below the blue fib. That's a big stop. That's a sim stop. 1036. Momentum, flat triggers. Same idea though, right, Cav? If it pulls back to this fib and everything's above it, the fib is likely to hold. Same way it did here. So taking a little more aggressive stop placement, giving it a little more room to run. With it being the NASDAQ, once it gets on the good side of those triggers though, Cav knows he's home free and rides it all the way up. Nicely done, Cav. And look at that. They just wanted to push up a little further, didn't they? But the large triggers never rolled. So they got us, but when you hit that mid band, the large triggers never rolled. Some of you just take a reversal bar and get back in. Losers happen, guys. Losers aren't the whole part of trading, but they do happen every now and then, and they are a very normal part of a positive equity curve. So the idea is that you put yourself in a position to take fewer losers and winners. And that's by not trading into areas, and that's by seeing that you have momentum and looking for opportunities. I don't have momentum. I don't have a clear path. If you took a shot, I hope you managed. Price reaches resistance. Where are my triggers? They're all below. Let's see if there's a reaction off resistance. Looks like there may be. S&P is having a moment. Crude oil. Pretty cool, isn't it? I don't know. It amazes me how much information the indicators give. If you just listen to them. Instead of saying, wow, I really hope I make money, say, wow, I hope I have an advantage. I want to look at my indicators. I want to feel like I'm on the good side of things, guys. My trend is down. My large are down. My smalls are coming up. But it's not a true termination because the small triggers got through. We're in a transition phase. Notice how they couldn't finish the move up top. 50-50 trades are less likely to work. There is the potential that our buyers are looking for that key area at 73.80, maybe even a key area at 74.12. This is the idea of unfinished business, guys. If your market reverses not from a termination condition, comes down, hits that mid band, a couple fibs, 50-50s, very often they're trying to get higher. And it's a big chart trend trade. And we'll see what happens. John Novak used to do this to me, and it used to aggravate me. Because I would take a short trade right here, not reading my indicators, and he would draw that circle and say, let's see if they want to come back up and find that area of resistance. But where's their first stop? The first fib they're going to hit's right there. We're going to have to gauge the reaction and see if the sellers said, nope, we really want it to go down, or if the buyers said, absolutely, we're going to give it all we have, let's go find a higher area. Into resistance, all the triggers are below, and I'll be darned, they haven't gotten through it yet, guys. There's that weak bottom, right to the mid band. Let's see if that was the fib in their sights. They've got work to do, right? The buyers tried to push up and the sellers said no. And the buyers tried to push up and the sellers said no. And now the buyers are trying. This is their last ditch effort, 22.75. And we're going to see if they've got it in them to push the market up. If they do, awesome. If they don't, the market's more likely to head down to the next key Fibonacci area. Got one line in the way. Do you guys see the line? 60, 22, 75. Price hit it. All the triggers are above it. Same thing that happened here. So the one thing that a lot of you are probably thinking right now, and I'm thinking it myself, is son of a bitch, I can't get a trade. I can't find a trade. I can't get into the market. I can't find a way to make money. And guys, there's going to be days where there may not be easy opportunities. There's not a lot of them, but there may be days where there's not easy opportunities. But the great thing is if you have a plan that is based on easy opportunities and you have a recipe to find more success than failure, guys, you can become patient and you can say to yourself, there's too many opportunities to take the maybe trades. There's too many opportunities. And this one, if I were a gambling man, I would say they're looking for the fib. Just have one little hitch, guys. One little flaw in the slaw. And off they go. And let's see what they want to do. I love it. All right, guys, I'm going to walk away for a few minutes. Do you guys want to stare at crude oil or do you want to stare at the S&P? We'll leave that box there. I'll leave you guys with crude oil. Let's see if that's where they were headed. We'll know in just a minute right at this area. I'll be back in 5, guys. Go stretch your legs. decision-making point, right? So let's let the triggers tell the story. Smalls are up, large are up, momentum is there, path is not yet. So it's a holding pattern. Look at that. S&P made it, didn't they? Guys, I used to think John Novak had a crystal ball. How many people went long because of a pivot stop out and a trend change? Guys, when you begin to recognize patterns, so it's kind of it's a process. First, it's what do my indicators say? And what does it mean to me, right? My indicators say strong triggers, but my indicators say that this area isn't broken yet. Divergence tells me that there was a slowdown. Guys, this is a great opportunity to sit still for a second, to say, well, this may not be my best look. It may not be my highest advantage. And then you get to the point you're like, okay, well, this pattern suggests more down, and this pattern suggests more down. And then your trade plan changes, and you're like, oh, let me find an opportunity. Because this pattern, how do I capitalize on it? How do I get to a point where I can take this pattern and find opportunity over here as they go up to the fib that we thought they are most likely to go to? Isn't that amazing? You can predict what the market's going to do. It doesn't guarantee that it'll happen, but we just did it based on patterns. All right, Wayne, let's see what you're doing, man. Gold. So there's your retrace. There's your termination. There's your pullback all the way to Fibonacci support. The large trigger said, man, we're above, we're good. Wayne, go long. And you did on the good side of the triggers. Absolutely perfect. So that's exactly what we just saw in crude oil and the S&P. Let it close the gap. It'll tell you what it's going to do. Nice job, Wayne. I like it. And then when this one doesn't break, Wayne says, there's my momentum shot, and I'll take it down to the fib. Nicely done. Great trading, Wayne. Great trading. Gold is a different animal. It really is. Gold is temperamental. Gold is that girlfriend you had in high school that you made so mad she tried to run you over. Wayne, you do a really great job trading gold. It's not for everybody. All right. Strong in, all the way up. Large triggers don't blink. Right back into the area. Still in the decision-making zone. Do you guys see it again? Weak bottom, all the way to the mid-band. Are they going to try and go lower? Is there another fib those sellers were trying to get? We're about to find out. We're going to wait for the reaction and see what they give us. Does everybody notice that the large triggers did not roll off of Fibonacci support? They never gave an indication that up was the direction they wanted to go. So as we come into this area, we're going to wait. We're going to see. What are they going to tell us? These are the things that you don't notice as a brand new user. These are the things that you don't think about as a brand new user. You're like, well, support held. There's the bounce. I want to go long. Everything's red. It's got just a little bit of work to do. If it's really going to go up, if it's really going to be a bottom, guys, the triggers will roll down here. The same way they rolled up here, the same way they rolled down here and they rolled up here. If it's really going to be a bottom, those will turn green. If it's really going to be a bottom, these will at least give you some indication. We're just not there yet. We're in that, oh man, I see two potential outcomes. I see more up from support, but I also see that down is a very real possibility based on my indicators. Let me wait for a little bit of agreement. Let me wait for just a little bit of everything is at least the same color. And it's the patience piece. It's the 90% of your day waiting for opportunities. I messaged John Novak privately. I was like, I feel like today is a really hard day to be the first day to watch the live markets all day long because we're seeing a lot of huge moves followed by indecision. A lot of huge moves followed by indecision. Paul, there's your termination. There's your small triggers rolling. Let's see if there's a snapback to the small triggers right at an area. Do you see it, Paul W? First, it's a termination. Then you get the strong triggers. Do I have an area? There it is. Can we capitalize based on the momentum look? And you could say, all right, that's all the risk I want to put on this one. Because if it doesn't go up with that momentum, maybe I don't want to be in this trade. But look how quickly it rocketed initially. And I don't know what's going to happen, guys. Does it fit my rules? It does. That's my entry. I don't even know what targets are set out on this. That's like 2.5. Oh, Kathy, that's yours. There's the first target. Any reason we can't go break even and see if it just keeps running? It's a momentum trade. So we'll force a loss of momentum, guys. We'll force it to close on the wrong side of the triggers. And until that happens, we're going to ride this thing as far as it wants to take us. So I'm going to put that in an edge because who knows, we may get there. So first, a termination, strong small triggers, snapback right to the mid-band. That is a trade that Nexgen has been teaching for years. Still going. Any questions about that setup? It's not a trend trade, guys, but Fibonacci is powerful. And when it sets up, it did right there as well almost. You can capitalize. Whoop, and they came and got us. And now we have to reassess. What am I looking for? Well, I have momentum. I'm coming from a termination that reversed the market. There's a mid-band right at the triggers. There's a lot of risk, though, in this particular trade because we know that price tends to close the gap to the triggers. Can you wait for a confirmation bar? If you really wanted to take a long trade, could you just say, you know what? I'll force it to go in the direction of the triggers from the termination off the large triggers. And if it gives me a reversal bar from that area, I choose to take the trade. And if it doesn't, guess what? I never take the trade. You guys following? Termination, reversal, momentum. I don't want to just jump in because it's a lot of risk. I want to force a reversal bar. I want the market to say, absolutely, we like this spot, we like this look, we love this termination, and look at that. It never gives it, and I never have to take the trade. Does the live stuff help a little bit? I think it's beneficial. And there's that same concept. It started with a bad bottom. Where's the next fib? Oh, I'm about to crash. I'm about to crash, guys. I'll have to reload. Too much stuff. I love this, guys, but people think that day trading is constant activity. It's really not. I always tell you guys it's 90% of your day is reading indicators. And today is a visual of that. Waiting for your rules to be met is one of the most difficult things you could ever do. I firmly believe that. Waiting for everything to come together to give you those advantages. That's going to be the hardest part about being a day trader. But I think what we're seeing is that there are patterns that we can count on to repeat themselves. Bad bottoms very often produce continuation in the direction of the original trend. Strong triggers, 3 triggers through the divergence low. I'm still calculating. We'll see if it comes back up to the 16 area. Sell limit 2, just below the mid band. Oh no, it missed me. Or did it? I don't know. I have odds favorable. It has the potential to break. 3 triggers are through. Guys, it just reloaded a little late. Who knows? It may still come get us. Strong triggers, direction, 3 triggers through. And guys, that was your entry. I was just late. Pulled right back to the mid band inside of triggers. There we go. They came back for us. Stop where the market shouldn't go. Oops. I forgot that I built an automated. First target hit. We'll go break even. I've actually got a trailing stop built in here. So as it goes down, my stop follows. But guys, this is your recipe. Strong triggers, 3 triggers through, pull back to the area inside of triggers. Ta-da! Any questions? Do you guys see it? Am I the only one in this trade right now? I don't know what my ATM strategy is with the trailing stop. But there it is again. Whoops. There it is again. And watch this. If you circle where your entry was, it looks like a tail on the large chart. And it looks like 3 divergences. This one's about to fail. And we still made money on the failure because of a great entry, because of aggressive management, because of protecting ourselves, because it's not the perfect trade. This is fun. We're just going to keep doing this. And then where's our fib below? Are they going to hit it? What do you guys think? They've got a shot, right? Awesome, Steve. It's just following rules. I can say it all day long, right? I can say just follow a plan. Just follow a plan. Guys, there is so much waiting when you follow a plan. There is so much doing nothing. That's why you have to trust your plan. Steve, love it. So weak bottom, odds favorable, clear path. You get in just a little bit early, right? You try the momentum trade, and it turns into a trend trade, and it does it perfect. And Steve, the one thing, when those small triggers are inside of the large, the momentum's a little bit slower, and you will get that pullback sometimes. Great heads up. You know that this is trend trade pattern. You know exactly where it's likely to come from. And just rock star all the way up to the top. Really nice trade there, Steve. And then, odds favorable and no clear path. Do you see it? No triggers through, and the short fails. And when the short fails, Steve says, wait a minute, I have strong triggers. There's your snap back to the mid band, and he rides that momentum up right to trouble, turns into a trend trade, rides it right back up to trouble. Read your note number 2. Trade directly into terms, double divergence. What was I thinking? You were thinking, man, I hope it goes down. And you say early entry on the 13-2, but with the strong bottom and everything rolls, it's an amazing entry. Because it's nothing but momentum, right? And those fast, strong triggers, I love everything about it. And you capitalized on a market that was caught in a range. So Paul was asking earlier, Mark, is there a way to get that momentum in a range? Let one side of the range hold, let the triggers roll, and ride that momentum. Just awesome. And then where you get in at 42, right up here, you're trading into that termination condition. So quick management was the order of the day, and you get paid. and then you leave it alone because the trigger said no more. Great job, Steve. Really great job. Hey guys, you're gonna do this. Have I ever mentioned that you'll make mistakes? That you guys aren't perfect, that I'm not perfect, that there will be times where you get caught up in the moment and just really hope that things work out. And Steve, one of the talks that we had, and we've had over the last couple weeks, maybe not weeks, last couple days, 100% termination condition. If I were going to take a shot into a termination condition, Steve, the first thing I would do was make sure that I have the strong top, just like you did. The second thing I would do is make sure that I have odds favorable momentum, just like you did. And the third thing is I would want strong triggers and no divergence. Because with all that momentum from a strong top, very often there's at least a retest. And that's what we see here. And the one thing that we were saying is that if you're going to take chances, guys, the first shot is typically the one that's going to work. Because if the first shot fails, you have to begin to believe that the second shot is more likely to fail. So that was kind of something we were working on over the week, just talking about it. The first shot, there it is right there. And then the second shot is where you find failure. Does that make sense, guys? Strong triggers, no divergence. That's the rule breaking look. I'm not saying break your rules, but I'm saying if you're gonna, let it revolve around advantages. Oh man, they didn't make it. They pushed down. 3, 1, 2, 3, 4 divergences in the same location. Says that that's a termination condition. And now we're right back into the mid band. No triggers through the area. I don't think this box is out of play yet. Another bad bottom. Just got to see. We're looking at the fight, guys. Looking at the fight. I love the fight. I don't have to get caught in it. I don't feel compelled to go long yet, but I'm sure not going short against these indicators. And guys, these days will become easier. I feel like a fish out of water today. I hope this is beneficial to you guys, looking at the live market, talking through it. What do we see? What don't we see? What are the potential? This is what I love to do. And I'm having a good time with it. We're going to start working TradingView into it more because I think there's a lot of opportunity, but I think there's also a little contradiction. And one of those things is crude oil. A lot of you see the potential to break, right? Oh, well, there it is loading. But you don't get the triggers through. So it keeps you out of the loser. It's been amazing. Oh, yeah, Jen, I think this is where we're headed. I think this is where we're headed. Because this is what we need. Guys, I have beat 101 stuff into your brains incessantly. And to be completely honest with you, there are 500 videos. If you really need the rules, guys, there's 500 videos of the rules. And you can ask any questions that you want. But let's do it this way. Let's follow some patterns. Let's talk about advantages. I love this. This is my day, guys. This is what excites me. So for John Novak to do this, John Novak told me this morning, he goes, hey, let's change the approach. And I hate change. And I was like, oh, crap. But I didn't say crap. But I think this works out. I really do. I really do think this is work. Your brain is now a tape recorder with one cassette rolls. I love it. And it works, right? Who was this? Miss Kathy? High probability. How about medium probability? Can we go medium probability, Miss Kathy? And let me go through and let's talk about this. I'm so glad you guys are giving me lessons here. You're going to dig this. So let's go through the process. What do I look for? What direction is the market going? The market's going up. Do I have strong triggers? Absolutely, I have strong triggers. And then, Kathy, you talk about your path. but you're looking in the wrong spot. So when we define path, when we're looking to see if we have what we need, we're going to let the large chart tell us. Because this is the slow moving, I can really see the advantages on it. And then this is my refinement. I can find an entry. So Kathy, you have all the momentum in the world. You definitely have the potential to break. And what we're looking at here is the beginning of a slowdown. So we've got one divergence which says we're losing the momentum that we need to break this area. We get a second divergence which says, hey, we're losing it again, but your absolute rock star entry allows you to make quick profits before the market fails. And did it go down from here at 952? Let's go look. I like going back too. I love seeing what happened next. So at 952, that was this one right here. And it did go down, didn't it? And that's perfect. So your trigger lines tell you, hey, we're not broken yet. Your divergences tell you that we're losing steam. And Kathy, your amazing entry creates an opportunity for you to make a little money and get to break even before things go bad on a market that isn't convicted. Great job. When you know what you're up against, guys, you can begin to manage a little more assertively. So let's pull this picture. I like this one. Guys, a trade as taught to the brand new user is the combination of momentum plus the clear path and then defining an entry area. When one of them goes away, you fall into medium probability. And Kathy, that's why I said I don't think that one's high probability. It's medium. You had momentum, but you didn't have a clear path, and you had an entry, and you managed it assertively. Outstanding. It's when we start giving up 2/3 of the advantages, guys, that's where the losses seem to come flooding in. So, Miss Kathy, I love gold stars, and you get one. You had 2 out of 3, you managed assertively, and you managed to make money on a trade that failed because your indicators told you that it was likely to fail. I love it. High five yourself. Have Rick give you a high five because that's amazing chart reading and awesome execution. All right, Miss Trina. 2, 3, we got 4. I love that. And good morning to you. Why are you sorry? 4 is not lots. Have you met your boyfriend? 77. That's the record. 77 is the record. And every one of them got attention. And I'm not shy to say Wayne is a pretty outstanding trader. He got a lot of feedback to get to where he wants to be. All right. Mom plus clear path. Oh, momentum plus clear path. Trina says, let me get above the things that can create a bounce. And let me ride the momentum up to the next trouble spot. And when nothing blinks, I take it to the fib. And Trina, this is absolutely beautiful. With momentum and clear path, you guys will find a way. I say that every day. And can I tell you that the greatest thing about this trade is that you let it get above. You let it get back to the good side of everything before you jumped in. And it made it pretty effortless. I'm not sure he's the only overachiever in the family. All right. Odds favorable, strong triggers. You hadn't quite reached the midband. And you missed this entry. That's okay. So you take the next one and you take it right to the midband. And Trina, so management here is the only thing that we really need to talk about. Because the look is great, the entry makes sense. But anytime price reaches a midband and the large triggers are a full bar away, do you recognize that as the gap theory? So the gap theory says, hey, Trina, go ahead and get paid right here. Don't give it all back. And if you need to study the gap theory a little bit and you just want to get more comfortable with it, on the spreadsheet, there's like 30 gap theory examples. I can drop that in the room. But the gap theory is the, okay, let me understand if this is going to be one of those spots that can kill my forward progress. And it very much was there. But you still get paid and you're out break even. And even on trades that fail, you guys can make money. That's what's cool, is even on the trades that don't go the distance, y'all's great entries are creating amazing opportunities for money. Uh-oh, page not found. Hold on. We have two that are stuck together. Momentum, strong trending market, and nothing in the way. And Trina knows, and I love this, Trina knows that in a strong trending market where the smalls are riding the large 30 plus bars, it's by the midband until it quits working. But Trina, no place to put a stop, right? So you force it to go up, and absolutely beautiful. You do it all over again, making money again. Great job. And I love this. I don't have a clearly defined entry inside of triggers. Let me force confirmation. Let me force the market to go in the direction of the large chart. And you did it expertly. Nice job. Uh-oh, and that's probably the second half. So let me delete the first half and let's see if that works. Man, look at me. This looks like Wayne's chart, Trina. This doesn't look like your chart at all. Are you posting for Wayne? Let me see. Maybe I'm trying to fix your links. Nope, that's not it. You forgot to put spaces between a couple of them. And when you forget to put spaces in between them, sometimes they run together and I don't get a true link. Will you go through your last couple links for me? Yeah, because that goes to Wayne's, oddly enough. Will you go through your last couple links for me and repost them? I would appreciate that. I want to see what you're doing. I can't seem to decipher with the links stuck together. Paul, termination, strong triggers, 3 triggers through. Great entry. Just didn't work. The one thing you could have done though, Paul, is you could have used that reversal bar for stop placement. It's a good look. It has the potential to break. You're just looking at a market that's struggling today. Great job on that one, Paul. Sometimes they just don't work. Cav, odds favorable, potential to break, pull back to the area inside of triggers, run it right back up to the trouble. Easy money, Cav. Nicely done. Nicely done. And then Alex, you stalked this for almost an hour. You're right when you mentioned patience is key. I love it. Look at that. Termination. All the momentum doesn't hit. And Alex, beautiful. The wait is worth it, isn't it? How long does it take to believe that? I watch all of you grow with it. That's what's fun, is I watch you guys go from absolutely no patience, I want to be in every move, to just sniper. Great job, Alex. And everybody's different. I'm still impatient some days. Have you ever had the greatest trading day ever, and then the next day it's like you forgot what a tick is? I've done that too. Great trade. Thank you for that, Wayne. Nope, we already saw that one. And we already saw that one. The one that I'm trying to see... Oh, you know what, Trina? 2 of yours came up with pictures. If there's more, we're going to have to figure those out. Cav, can I argue with you? Can I argue with you, Cav? Just for the fun of it. So momentum trade. Half the class knows what I'm going to say. I can't have a momentum trade if I don't have momentum on my charts. And this is such a concept, right? Because the smalls are inside. They're not even riding in that strong trending look. But if you want to play the strong trending market, Cav, I'm going to give you that one. I'm going to say, okay, I'm going to give you the strong trending market momentum here. But on your small chart, you're into trouble and the small triggers are still below it. And the rules for a momentum trade say that the small triggers have to get above and then you buy the snapback. So what you really have here is a, hey, everything says up, I'm going to jump the fudge in. And in a perfect world, Cav, it takes momentum to have a momentum trade. So from separation to closure, that's your best look for taking momentum if you're just doing it in the middle of a move, right? If you're coming off of a strong bottom, Cav, those small triggers are going to be enough if the large trigger lines, if the small chart lines up with it from a termination. But if you're looking for that middle of the playing field, get in with momentum, that separation, or at least being in a strong tending market, pays dividends. And then what you want is you want to clear this trouble. So do you see how, and this is kind of cool. Let me blow this up a little bit. Yeah, you're welcome. Because I love these trades. But let's look at price action. So right at the 1-to-1s, you get a bounce. And do you see the three little tails that happen that dissect the 1-to-1s? All of this is that fight right at the area that could create trouble. So Cav, that little patience, let the back of the bar clear that bouncy thing. When everything is screaming, what you'll find is it typically creates a much less stressful environment for taking these just jumping in trades. Does that make sense? Lines can create a bounce. So it's okay to let price get away from those lines. Great stuff. All right. Ah, there we go, Wayne. Thank you. And Steve, I'll get to yours in just 1 second. Oh no, I think we already saw these. Momentum and path. Get in on... Nope, we saw it. This is a new one, though. This is a new one. All right. Momentum and path. So, Miss Trina, are we playing the strong trending market game here? 30 bars, same direction, riding the back. Momentum is assumed. Nothing in the way. There's your pullback to the mid band. There's your confirmation bar. You weren't there. There's your pullback to the mid band. You catch it on the way down. And it's beautiful. Momentum and path. Trina, are you on Wayne's account? Or is Wayne acting as your lawyer today? Either one is okay. Lawyer, I like it. Great trade. In a strong trending market, sell the mid-band till it stops working. Trina likes stop placement, so she forces it to go in the direction so she can manage it. Great job, Trina. Really great trading today. Steve, Mark, you need to go. I like the new format. Sent you a PM about the possible scam. I did respond to it. Steve, I did respond to your PM. And let me say that, guys, if John Novak, if Mark Novak, if Chris Novak, if Melinda Novak, there's a lot of Novaks, if Mark Dean, if Jim Forbes, if Cam, if anyone ever sends you a message in Discord that says, hey, send me crypto and I'll trade for you. Send me money and I'll trade for you. Send me money. Guys, we have your phone number and we're not shy. If we want your money for software, we'll call you and say, hey, cut us a check for software. We don't trade for people. We don't We won't trade for you. We won't give you a percentage of it. We won't pass um, prop firm accounts for you. So if anyone ever reaches out and asks for anything, it is a scam. I wish people didn't fall for it. Maybe they would stop, but people do fall for it all the time because it's exciting. Oh my gosh, John Novak wants to trade for me. He picked me. And it's just, it's not real. So I did respond, but that is definitely worth the public service announcement. And if you look at the announcement section over on the Discord channel, it's about scammers. 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 So there's a lot of them. Yeah. Unfortunately, Steve, there's just nothing I can do about it. You can block them. You can report them. But usually there is one very subtle difference, whether it is misspelling of Novak or John without an H. But yeah, just ditch them all. Thank you for bringing that to my attention. That's worth mentioning in the room for sure. But Joy, a couple questions. Would you please explain these buttons on the screen? Absolutely. Are you ready? Buy immediately. Wherever the market is, if you want to go long, buy now. If you wanted to go short, sell now. Whoops. Completely ignore, you don't need them. If you're in the right trade, you should never have to reverse. If things go wrong, close. Buy bid, sell bid. They're not anything that I've ever used. Oh, that's ask. Buy, ask, sell, bid, right? So what those are, in the world of finance, especially in trading, bid, ask, buy, sell, they're just fundamental concepts. So bid is the highest price that the buyer is willing to pay. So when you buy bid, I think it puts you in higher, lower. It was with John Novak's face, yeah. Scammers are pretty clever. They really are. So, Bejoy, the cool thing is you can just say, hey, I don't need them. I don't need the ask. I don't need the bid, right? They're just not something that really comes in. The A and B below the close button, that's ask bid right here. That's neat, and we don't use it, but it's fun to watch. So what you're seeing right there are the people that both want to go the other direction. So the ask, 5, 4, 6, 4, and I don't know if these are multiplied by thousands. The market, that's the fight between buyers and sellers right there. It's a distraction. It doesn't have anything to do with rules, and I don't think it's a good I don't think it's a good predictive tool for what the market's going to do. But let's see if they get a run one direction or the other. When there's a higher number below, it's more like there's more orders wanting to go long than there are orders wanting to go short, and that's what creates the up and down movement. But it goes so fast. It's easier just to say, hey, you know what? With momentum and path, I'll enter at the area inside of favorable large triggers. Great question. I hope it doesn't frustrate you guys when I say things like, hey, you don't need it. You don't need the ask, the bids. You don't need these, right? You don't need to know what GTC means. You need to be able to recognize momentum. You need to be able to understand path. And man, once you have those, it's the too many mind. There's so many distractions on a chart that aren't as important if you allow them to work their way in. Why do tickers move rapidly at times? It's the influx. So let's use this as an example. So the sellers are in control and the market went fast and you can see the momentum. and everything is screaming down, Bejoy. And right here at this key area, what happens is there are sellers that are exiting positions, and there are buyers that are testing the water to see how much resistance the sellers are going to give. Well, the buyers can push all the way up to that key area with all these triggers down. And what you'll notice in successful trend trades is this is the exact point where the sellers flood the market again and say, no, we wanted to go down. Guys, that's why successful trend trades typically go fast. And the market, when you're at these key areas, it's fast. And when there's nothing in the way, it's fast. And you see these huge moves. And then when you get back to these areas, and you can visually see that there's no momentum, and you can see that there's no clear path. And if you go to the smaller chart, you'll notice that everything slows down. And why do they slow down? Because buyers and sellers are trying to figure out who's going to win. Have you ever watched that? When it's 100% clear, watch how quickly the market moves down to the next area when the sellers decide they want to take over. And when they clear the areas, that's when you see those really fast, crazy, awesome momentum moves. Does that make sense? So now that they're getting below stuff, we'll see what happens. Boom, look how fast it just went. There was nothing in the way. There was no fight. And it's like, brah, pow. That's the sound effect. Brah, pow, guys. When there's nothing in the way to jack up their good time, they're screaming. There's no resistance. No resistance to their efforts. And then when they hit 73.12, if they hit 73.12, guys, there's going to be a busload of buyers saying, hey, let's jack with them again. Maybe we'll push it up. That's how my brain thinks, Bejoy. I picture these two opposing forces, and these price bars are just an indication of the fight they're having. And when I've got more on my side for the fight, that's when I look for entries. Good stuff. Great questions. Wayne. Termination. Everything rolls. Momentum on 3 charts. There's the true momentum trade. And Wayne says, with momentum on 3 charts and nothing in the way, the sellers are going to scream. So, Bejoy, there's another good example, right? Decisions were made. The sellers won. Wayne says they're pushing hard. Let me ride that momentum down. Great trade, Wayne. Great trade. Here we go. There's nothing in the way. Everything is down. But the buyers are testing a little bit. You guys that jump into trades, that's why letting it clear areas tends to pay dividends. Because lines can create bounces. And there it is. If you thought you were going to jump in, that cyan line just ruined your party. 1,300 for the day, Wayne. Great job. Great job. Not so much a good bottom, just a mid-band. I like it. Every indicator up. All right, so Cav, what's the one thing that you kept off of your chart here? I hope Mark doesn't see it, so I'm not going to mention it. New users, do you see it? Do you know where I'm going with this? Price reached a divergence high. None of the triggers broke. Trina made her 400 goal for the day also. That's amazing. And Wayne, can I tell you how cool I think it is that you guys get to do this together? My wife's too busy to trade with me. But I think it's pretty awesome that you guys are doing it together. I love seeing father-son combos, mother-daughter combos. I think it's awesome. My kids won't do it with me. So Cav isn't going to own up, so we're going to bust his chops because clearly he's good at this stuff. Price reaches a divergence high and none of the triggers break. Can you guys, does everybody recognize that as an area that could stop the market? that could create an untradeable bounce, that could mess up the forward progress of everything. Just want to make sure that you guys see it. So if I go through the lineup, I have direction, the direction is up. I have momentum, the triggers are strong. I have a termination, and that's the fly in the ointment. That's what could create a problem for me. Cav also says, I have strong triggers on my small chart. I don't have any divergence or loss of momentum on my small chart, and I have an easily defined entry with low risk on my small chart. Let's make these go up. Whoops. Because we're going to do the for and against. Strong triggers, no divergence, easy area, every indicator up, going with the trend, however you want to do it, guys. But we're looking at like 7 to 1. 7 great things against one potential challenge. And look at where Cav gets out. Because it's not perfect, Cav says, it's not my job to hope. It's my job to get paid at things that could mess up my good time. Cav, this is such a great trade directly into a termination condition. You guys see how if you weigh out the good and the bad, you can make decisions? You can know whether or not you have to manage aggressively. I love it. All right, guys. Let's look at TradingView for a minute. Because I know there's a lot of TradingView people in here, guys. And a lot of you are looking to make that transition so you can take advantage of Nexgen funding. I love that. I'm excited about that. You can expect more and more to see some TradingView coming into the classroom, more and more TradingView. I think there's going to be a lot of demos that come in and they start working off of the TradingView as well. Guys, there's that termination, right? There's those zones, none of the triggers break. Goes all the way up to the mid band, none of the triggers are through, and sure enough, it's coming back down. And now we're in this transition, guys. We're trying to figure out, does it want to go up? Does it want to go down? I don't have a clear trade, so I'll go to the next chart. There's my termination condition. What time was that bottom? Around 11. Price reaches. Triggers are 3 days above. It holds. There's your high volume area trade to get up to the mid band. When the mid band doesn't hold, now we're just looking at the next one. We're waiting to see what happens. But all my triggers are above all my areas, and sure enough, the market went up. S&P hits a zone. All the triggers are above it. No reason to go short. Maybe look for opportunities long. Does that make sense, everybody? It's the same thing. It's just a different platform. Momentum is momentum. Areas are areas. When we couple no areas and momentum together, it's ridiculous, the opportunities that present themselves. Wayne's a gold trader. Now all of my triggers are below resistance. They tried to get above. I never got 3 triggers through. And the small chart has a little bit of trouble to work through. It's a fight. We'll see what happens. Man, it's a fight. We'll see what happens. Pretty cool, right? If I had to put a nickel on it, I would say 73.12 before 73.61. Because all my indicators are down, all of my triggers are below the areas. You too, Wayne, enjoy. Build something cool or fly something fast or just smile. Go hold Trina's hand. Take her out for dinner. She did a good job today. You guys enjoy. There's a whole lot of up. Anybody do that chili dog thing? Great class today, guys. This has been fun. This has been fun doing the live. Should we just do this every day for the rest of our lives? Talk about a live market. What do we see? What does it mean to us? Do these lessons stick better? Seeing it in the moment, they do? Cool. That's great, guys. That's the feedback that I need. Um, I want to give you guys what you need. If you are sitting in this room and you're like, man, I wish he'd talk about the basic stuff again, let me know. We can jump back and forth all day long. All day long. What I talk about in this room is 100% dependent on what you guys need and what you guys talk. Your brain is working harder. Mine too. Mine too. You see, okay, good, Victor. That's what I need. I'm having a blast, Jen. What you guys don't realize is that if I were here without an audience, everything that I've said today is my thought process. I'm looking at a market without the best momentum. My triggers aren't through the area. I don't have any areas inside of triggers. I'm going to pump the brakes. I'm not going to take a trade, guys. I'm not going to hope that it works. I'm going to let it get north of the area. You guys will get to the point to where you start making your decisions like that too. This is that look that we've seen 10 times today. Price retraces, triggers don't blink, and it continues up. It's amazing. Awesome. Absolutely. Ron, I appreciate you being here. If we had to pick the one pattern that seems to present itself the most today, look at your large triggers, guys. If you're one of those people that just loves going counter trend, look at the large triggers. Not your best look, right? When this happens right here, I'm looking for opportunities all day long to go up with those triggers. And maybe a little extra focus on triggers will change the way you guys look at things. Are there any trading view questions, guys? I don't want you to feel like this is 100% Ninja Trader. I know some of you are making that translation or that transfer over, and I want to make sure that you guys get what you need as well. And I really do think it's going to go that direction a little heavier pretty soon. All right. And you know who I'm talking about when I say this, but I haven't seen K Price in the lineup to give permissions yet. I don't want to give away family secrets. Can I do a live video on market replay? Claire, we did it in the room. Do you remember? We did it in the room and I made the video. You guys want to do one right now? Market replay for TradingView? Let's do it. We'll do it. And I'll tell you what. Give me 1 second. And we'll do a live video together as a classroom. You guys will be famous. How cool is that? I'm going to bring up my Camtasia, which is my recording studio. And oh, look at that. It's already in there. Cool. So we'll do this. We're gonna do the video here. And then before, did you say never mind? No, I'm excited about this. Let's do it. We'll do a little individual video. Why not? This will be good. And just before we do it, Marlon, under the instructions, here are all of your workspaces for TradingView. And all you have to do is click on it and copy it. And then once you copy it, it will put it into your layouts. And there's also a trading plan right above them too. All right, guys, so let's talk about market replay with this one. It's good to have you back, Marlon. And Claire, I think doing the video is a great idea. I'm sorry that you felt like it wasn't. So let me hit record, and we're going to do this together. So guys, when you're doing, 3, 2, 1, that's exciting. When you're looking to do market replay, replay trading on TradingView is actually quicker and easier to set up than it is on NinjaTrader. The first thing I do is I come to replay here, and under replay mode, I want to make sure that I have all charts because I want to be able to see both the 15-minute as well as the 1 minute. If you do single chart, it'll only do it on one chart and it makes it hard. So make sure that it's all charts. You can't see TV. Can you not see my screen, Claire? What are you looking at? What do you see? You may have frozen, but that's okay. That means that I'm going to stop this recording real quick and we'll do a new one. Jerry, you can see it. Guys, can you see my screen with TradingView up? Okay. Claire, I'm going to kill my feed real quick and I'm going to bring it back in. This happens to Jen sometimes too. Can you see TradingView now? It's coming up. There we go. Are you good? And let me just delete this one and we'll start over. You can see it now, Claire? Awesome. So let's get rid of that one. And we're going to go back to a new recording. So let's do market replay. In 3, 2, 1, action. All right, guys. So for market replay, it's the replay trading down here. But the first thing that you want to look at is make sure that it's all charts, not a single chart, because it's a 2-chart trading plan, 15-minute and 1 minute. And then you're just going to click on replay trading. When you do that, it's going to go, hey, you want to launch bar replay? Absolutely, I do. When I click launch bar replay, I see the blue dot, and that lets me know that I'm good to go. So then just collapse the panel, hit the little minimum here. And when you come back, pick a date. So this is crude oil. Let's say I want to go back to Wednesday. And I made a couple mistakes. I thought there were some opportunities. I click select, and it's going to bring my chart back to Wednesday, and it's going to load all the indicators, and it's going to be good to go. And then once I hit play, it's going to start running through bar by bar. And guys, this is great when you're working through areas that might hold, looking at trigger lines, making decisions. So when this holds and everything reverses here, maybe you want to find a sell, right? And you can buy and sell the market. You can flatten your positions. You can move your stops and targets. You can close out the position. And you can do all the things like it's a live market. And depending on which chart you click on, will be which chart you see your buys and sells. So you can see that it's over here. You can move your stops. You can move your targets. You can do everything. And then you can just flatten a position if it doesn't hit your goal. But that was a nice opportunity right off of termination. Everything rolls. Take the short. Get out in an area. And that is all there is to do in the replay. And then just X out when you're done, guys. And it goes right back to the live market. So let me take this and I will export it. And I will call it replay. Let me delete that. So give me just 1 second and I'll get you guys the video. It's so much easier than I thought it would be. When I did it the first time, I was like, oh, I'm doing replay trading and it's not coming up and I can't figure it out. And then I read instructions. And when I read the instructions, it got a little easier. And the live market says, hey, look, none of my triggers are below this area. And sure enough, it holds. Rick, that's my bad. I shouldn't have said that in a room full of men. So instructions, guys, are a direction or order. Detailed information telling how something should be done. I love that. Thanks for playing along on that one, Rick. That's good stuff. Got to bail. Go enjoy it. You made yours before 7, but had to hang around to hear that melodic voice. We'll see you Monday next week. Short trading week. Son's birthday coming up. Awesome. I love birthdays. I got two boys and two birthdays coming up over the next couple months. So it's fun when your kids grow up. Have a great weekend, Ron. Appreciate you being here, man. And you can just keep running through, guys. And if you always start with areas and triggers, right? If you always say 3 triggers didn't get through, I'm not taking the trade. You can start to avoid this stuff. And if you always say, all right, I don't have 3 triggers through, maybe the long isn't my best shot. That's the most basic approach. And then from that approach, you start finding more. You start finding more opportunities. You start talking to yourself in terms of advantages. And when you talk about things in terms of advantages, it gets easier. Let's see if that works. That's the video that we just made together, guys, on replay. You should be able to download it and take a look at it. Replay is awesome. And going back and practicing is awesome. You're old enough to have a kid turning 40? Here's your cream of wheat tapioca. You got me by a couple years. Not a lot, but a couple. I feel the same way. When my kid walks in and has a beard, I'm like, no. How does that happen? How does that happen? Hey, Paul. Does that look familiar yet, Paul? You're going to burn that one in your brain. But there it is. You have a hover round. Need those things on the stairs. So from 48 to 58, isn't that an easy $100? Pow. I don't have a link. I just dropped the video in. So Jerry, try this for me. More. Nope, hold on. There it is right there. So there's the download, Jerry. Click the download. It'll go to your download folder. And then you'll have it on your computer. I lost you guys real quick. Hold on. Oh, you're right there. There you go. I was like, where's the chat room? It's on the other screen, right in front of my face, and I missed it. Yeah, so that should get you just, and I kept it short enough, it should be an easy download. And guys, if you took the momentum trade, you reached a target, right? A divergence high line. None of the triggers are through. Finding a way to capitalize on momentum on the way up. Today has been a blast. My first 2 hours were terrifying. What if I don't have anything to say? It turns out that I have a lot to say. But it's the same stuff we've been saying forever, guys. What a great day. Thank you for being here. Thank you for struggling through my first day doing nothing but live market.